All right, what's going on, everybody? Happy Monday. Let's jump into it. We've got some of the strongest earnings growth, well, not some of, the strongest earnings growth in over 4 years occurring. And that was, in 2021 during, coming out of COVID when the government had essentially shut everything down, right? So to have growth this strong is very, very remarkable. And remember that, in bull markets, as the saying goes, stocks climb a wall of worry. So, in a bull market, it's always good to see negativity. It's good to see people, complaining about the economy or all the layoffs or government shutdown or trade wars. There's lots, and when it's not good is when nobody is complaining about anything, and when everybody is sort of euphoric, and you can't find a reason to be bearish. That is typically when I start to worry about, are we at some sort of top? Now, let's go over some of this in this article here. We can see here that year-on-year earnings growth across the Russell 3000 index reached 11% in the third quarter. This is a substantial rise from the 6% growth seen in the previous 3 months. So again, not only is the largest companies in the world doing fantastic, but so is small caps and the regular economy. This is fantastic to see. While GDP growth still continues to be very strong, back down in this area, GDP forecasts were still around 3%. So those are great numbers, and there's no reason to fight any sort of trend. There's no reason to try and outsmart anything. So over the last couple of trading days, it has been a great opportunity to get back in to equities. And so we'll go over here at NASDAQ and QQQs, the triple Qs on Friday. If this didn't scream extremely bullish, nothing does. I mean, this is just incredible off the 50-day moving average, which is the perfect risk to reward for my style. Same with the 21-day moving average right here, which I started positions on Thursday. I'm adding to them Friday as well, same thing. And then on Friday, with the close like this, I had figured, today was going to be a fantastic day. And even though we had gapped up substantially, I still added to the positions because strength in equities is not something to shy away from, or no need to really be precise depending on the type of strategy that you can use. So you can do debit spreads that take out some of the time decay, so you don't have to necessarily be worried on when the options are going to expire and losing options premium over the course of that contract. Or you can buy longer dated call options, right? So and work in and out of positions, and I never put a full position size on to begin with anyways. So since we're here, NASDAQ, the NASDAQ 100, looks great. Now, let's go over to Dow Jones. I think Dow Jones looks really, really good as well. You could see it came down here and filled this gap. And for example, right away this morning, I added to Dow Jones. I went long Dow Jones on Friday or maybe Thursday. I don't know. As well as NASDAQ, but this different here. So for Dow Jones, and so basically right away, first thing this morning, and we can see it gave a lot of it back, but again, it doesn't, everything bounces off the level that you want to see it bounce off of. For me, anyways, for my strategy. So, in the interim, the middle of the day, it doesn't really mean anything to me. I don't really care. I add to the position, and we'll let it ride. And as a matter of fact, here, whatever. Things are not in any sort of stretched position. So, so long as things continue in this sort of general trend, I could see this continuing for a decent amount of time. I mean, certainly, to the end of the week, right? And for these positions, it would be swing positions. So, not looking for much more than that. All right. So now we'll go over to Russell. And the Russell, again, on Friday had a really nice close. So now we're back above the 50-day moving average, back above the 21-day moving average. I mean, no reason to be of any concerns. S&P 500, I mean, very, very strong day. Strong day on Friday, as well as today. And so you like to see a lot of times some sort of shakeout, where you have all sorts of people that are going to be putting their stop loss below this 50-day moving average. And so you like to see all those stop loss orders get hit and taken out, and then it rebound right back above that support level. So today's no surprise that it was going to be a strong day today. My other position that I'm in is, so those are all the indexes. So my other position I'm in is going to be Tesla. I've been in Tesla now for a little while. And I'm still in Tesla. All of this is sort of funky right here, but this could be forming a Darvas box pattern right here, and so this good sort of consolidation after a huge move up, and this is looking a little messy. So I haven't been adding to this position, but again, I mean, this is of no concern above the 50-day moving average, and any sort of breakout from this range is definitely a place that I would be adding to this position. So I'm just chilling in here. It's just an equity position. So yeah, now we're on to Mag 7. So NVIDIA, I mean, again, on Friday, I looked at NVIDIA on Friday, and just this day on Friday, I mean, it looked so good. If NVIDIA does good, kind of like the whole market does good, right? So it was of no concern. Friday was of no concern. In fact, I was extremely bullish coming into this week. And so NVIDIA, I mean, this looks fantastic. I mean, even with this huge gap up, this is still a fantastic place to go after it. Google's just about to break out to all-time highs, again, after some sort of little box pattern. Let's see. So, just a week of consolidation, which isn't that much, but Google, Apple. So we'll go over Apple now. And I mean, clearly this isn't an uptrend. You got the stochastic down here at 25. This might just, look sort of stretched if you just kind of look at this, but the secondary indicators are showing otherwise. However, I wouldn't be going after Apple. I'm more of go after indexes, but for example, I mean, Nvidia looks, way better. So if you're going to pick one, I would go after Nvidia. And then Microsoft looks the weakest. However, again, you got this point below 500 where everybody's kind of eyeing, and so you like to see kind of a break below 500 and then it regain 500. Again, this doesn't meet my criteria. However, this is at extended levels and it's to the downside, and that's a pretty common theme that I'm seeing across all of Mag 7 is extended to the downside. Look at this relative strength down here in the 30s, stochastic down here at 14, right? I mean, you can go through a chart every time things get down to this level, and we're talking about the best companies, in the world. The probability of them going lower is a lot less. So, you like to see this just overall in terms of any sort of move to the upside. I mean, look at Meta here. Completely lost the 200-day moving average. This is still a no-go. However, I mean, the relative strength down here in extreme levels. And so at some point, this is going to rebound like we're already seeing. But I mean, shoot, this could go all the way up to the 200-day moving average. This could go all the way up and fill this gap up here, another 100 points higher. So again, these are all things that bode well for overall bullish on indexes. And basically that's all that I care about. Okay. So now let's go over to gold. Gold had a fantastic day. I was more focused on, equities recently. So again, I still have not done anything here in gold, and that's fine. I'm certainly not going to catch everything, and trying to catch everything is a losing strategy. So silver, it's looking good, rocking and rolling. Let's go over Bitcoin. Bitcoin's regained the 200-day moving average and continues to be an underperformer. For Bitcoin to really start working, it's going to have to start outperforming indexes, and particularly the S&P 500 index. Because what happens is when institutional investors are figuring out where they're going to allocate capital to, they allocate capital to where growth is the strongest. So their decision is, are we going to go after Bitcoin that underperforms the top 500 companies in the world when we can just use a little bit of leverage in S&P 500, best companies in the entire world? The answer is no. Of course, you're going to be going after the S&P 500. So until Bitcoin starts outperforming the S&P 500, it's not the best to go after this right now. It's always best to follow where the money is going. And, as long as equities perform well, I still expect Bitcoin to perform well. But typically, you want to allocate funds to where you're kind of being forced into those positions. And right now, that is not Bitcoin, so it doesn't even matter. It doesn't, who cares, right? There's money flowing into the S&P 500, money flowing into Dow, Russell, NASDAQ, Mag 7, right? So you can stick with those things. Nvidia, for example. I mean, Nvidia is up, 5.8% today, and any secondary indicator is not at any sort of extreme levels at all. So now this gap will get filled down here. For 10-point move down will happen at some point. So just, you'd be kind of cautious of that. Let's look at this on a weekly chart. Wow, look at that. That's pretty wild, huh? But so on a weekly chart, you want to see this. None of this is extended. So, okay. All right. Moving on. Let's go over just kind of some sectors here real quick. So, SMH, again, I mean, look at this. Down here, 20 stochastic. 20 stochastic is a great place to start a position as a swing trader. It's a fantastic place to start a position. Same with RSI at 50. And this is exactly what we've seen here on Friday. And that's my style. That's what I do. How I trade options. That is, anyways. Okay, so that's semis. All right. Well, moving on. So industrials. Let's take a look at industrials here. And again, so down here, 20 stochastic. A great place to start a position. So this looks like in the short term, there is room to the upside. Will it happen? Don't know, but there's a higher probability that it will versus it won't. So here with XLF, this is beneath the 50-day moving average that is rolling over. That's never a good sign. A good sign here is there's some sort of trend line that has kind of been broken, that's being attempted to be broken. So that is pretty good. Let's go over here to real estate. I don't understand what there is to do here. Again, this is a perfect example. Why? Well, institutional investors don't go after stuff like this because of the significant underperformance. You have to make an argument as to why you're going after something that underperforms when you have investors to be accountable to, a board to be accountable to. No investor is going to be yelling at their portfolio manager as to why are you not in the real estate fund that has done nothing for 5 years, as opposed to Nvidia that's up 1,000,000% in 5 years, right? So they're almost forced to be in the best performing stocks. That's why the best performing stocks continue to work for a long period of time. Sorry. Oh, let's look at industrials or utilities, and yeah, I'll probably go after this tomorrow. Yeah, I'll probably go after utilities tomorrow. And again, I mean, you've got the stochastic that was down here at pretty low levels, bouncing off of the 50-day moving average, now back above here. I don't know exactly if I'm going to be waiting for any sort of strength moving forward here or not, through this or not. A sector like utilities that is in a very nice uptrend for a long time now. Utilities has been in a very nice uptrend. And with very little implied volatility. So when a move does happen, you get, and even though it might be a small move, you might think, oh, that's 0.5%, whatever. But the options market is pricing in very, very small moves. So everything is relative. So when you get a nice move out of a sector like XLU, utilities, you can get fantastic gains from that position, which is always something good to look for as a trader, where you can risk very little for a good outsized return, especially in an uptrending sector. So again, there's nothing fancy with any of this stuff. Just super simple. Is this in an uptrend? Does this meet my criteria? That's it. That's it. Not oh, there's, any sort of outside, anything, any noise, whatever. Because like I say, that path, you make one exception, it is a slippery slope, and then you could make an excuse to never do anything, right? And so all you can do is go after what the strategy is. And any strategy can work for that matter. It's just actually following through and going after it. Okay, and so yeah, I mean that's pretty much. Let's go over some nuclear stocks here real quick and just see how they're performing. And yeah, I mean pretty volatile, but in a very fantastic uptrend. This is really good to see because these have performed well this year. Wow, look at this. CCJ off the 50-day moving average. Wow. What other ones are there? SMR. And, oh, not looking good. Okay, so that's it. Let's go over Unity Software, and then let's go over Roblox. So again, these are, stocks that are farther out on the risk curve. Look at this. Wow. See, this is why it's important to have some sort of rules, right? I mean, this is giving up a lot. Wow. But again, I mean, definitely something to watch. That's for sure. All right. There's a pullback. Been waiting for a pullback in Roblox. All right. And so I think that's it. Let's kind of look at bonds here, see how they're doing. I haven't been concerned at all with the bond market, as of late. So I haven't been paying too much attention to it. There's, oh shoot, we got to look at Amazon, and then we'll call it a day. I mean, look at this huge gap up on earnings. And it's flagging. It is impossible to just look at things with an unbiased opinion in Mag 7 and be bearish. If you're just don't know anything that's going on in the world with government, with flights being canceled, with whatever, and you just look at Amazon gap up to all-time highs on earnings, now flagging, although this is sort of crazy and wild, but a total consolidation, you're like, wow, geez, I guess, things are going fantastic with the consumers, huh? Google almost all-time highs. Like, all right, I guess I can't be too bearish here with all of this, And I don't know what else. Oh yeah, like Nvidia, right? Whoa, that's up 6%, 5.8% today. I guess things are rocking and rolling, right? I mean, didn't the government just say they can't sell their chips to China? Like that's why it's one of the things where just any sort of noise is dumb. I mean, this huge pullback that was happening, a lot of it was the government saying they can't sell any chips to China. However, on the previous earnings call, if you listen to the previous earnings call with Nvidia, their forward guidance didn't even include any chips to China, any selling of their chips to China. And maybe I'm wrong about that a little bit, but essentially I remember them saying in their forward guidance that didn't include any selling of their chips to China, which is huge, right? So, then this massive pullback happens because the government says they can't sell their chips to China. It's like, well, that's what everyone already... if you listen to the earnings call, I mean, that's what they said. I mean, that's what the forward guidance was in. So whether they're going to sell them to them or not, it's all upside, right? So everything is relative. I don't know. So anyways, that's it. We'll catch you guys on the flip side, and hopefully that was a nice short one. Later.